Good afternoon, everyone. My name is Patrick Hawe. I'm an associate member of T3 Trading Group, which is an SEC registered member broker-dealer and member of FINRA SIPC. All trades placed by myself are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Rich, I did not have time to figure out the 1080p YouTube upload today. Maybe at some point tomorrow. I kind of forgot about that, to be honest, but today was a little crazy, so my bad. Position update, no new swings. Did a little trading today, but didn't keep anything new. Alright, so Tuesday, it is only Tuesday. This is a crazy week already. And that being said, we talked about that this morning too. It's one of those spans in this market where we're range trading, but we're range trading in a pretty big range, more or less, tighter range 437 to 433, bigger range 437-ish, all the way down to 430. It's one of those times in the markets where I was saying earlier, it kind of reminds me of this week back here where every day is kind of crazy and, we're up and we're down, and even these candles usually don't do it justice. These past two daily candles definitely don't do it justice of the intraday action that takes place during those days. And then when all the craziness is all said and done, 5 days later, you look at your daily chart and we haven't made any progress in either direction, even though it feels like some days we're ripping higher and other days we're breaking down in a big way and this and that. So that's why it's always good to keep those multiple time frame charts up, including the weeklies too. Weeklies is something that you always should be checking as well. And technically we're still in a weekly downtrend, as we like to talk about here. So I titled the video today, Failed Breakdown to Failed Breakout, if you will, which is kind of what we saw today. Technically that would be illiterate because in trading technical terms, I learned this from my friend who is a CTA, it's actually a breakout to the downside. It's not technically called a breakdown. I don't know if anyone's ever heard of that before. I never hear anyone say that, but just a little fun fact. They're not breakdowns, they're breakouts to the downside. But anyways, so crazy intraday action. So today, this morning, I kind of got to type some of this stuff up to remember where we even were this morning. Feels like it was a long time ago. We were coming into a gap down, and looking at the pre-market chart, it was a small gap down from what I remember at first that then got worse on retail sales. Yeah, that's right. So a little bit of a gap down, trending lower pre-market. We had retail sales come out at 8:30. Those retail sales were hot in a good way, but in not a good way where the economy is still nice and strong. People are spending their money. Realistically, people probably aren't spending their money, but they're swiping their credit card. But they're good retail sales numbers, which isn't exactly what the Fed wants to see. So market was ticking down on that. And I think there was something else that came out pre-market too, but I'm blanking so hard because it feels like it was a long time ago. It might have just been those retail sales though. But I remember TLT getting hit, and I'm just looking back at the data real quick. Oh yeah, NVIDIA, that's right. Yeah, what a day, huh? Yeah, so then there's a Reuters headline that came out about further blocks on AI chips, specifically NVIDIA was mentioned as well, and yes, you guys are correct, thank you. So NVIDIA, it was like right at the same time, more or less, got hit hard pre-market, bounced a little, but NVIDIA was trading, we were talking about that in the morning meeting too, NVIDIA was trading 460 early this morning and traded all the way down. I mean, pre-market it traded down to like 442, which felt crazy. It actually ended up bottoming down at 425. That is a 40-point sell-off in a couple hours. That's a lot for NVIDIA for anything. That's a really, really big move. That's now that I say that out loud, that's like almost 10%. Kind of wild. So yeah, so retail sales came out. That chip news came out. That was hitting a bunch of stuff down too. I know like VMware and Avgo were somewhat getting mentioned in that. It even hit like Apple down. AMD got hit as well, pretty hard pre-market. That recovered a little bit better. It seemed like the focus was on NVIDIA from that news. So we went from a trickling down market, and then again you can see with TLT here, I believe this is the 830 bar, also gapping down, trickling lower pre-market, retail sales hit, interest rates go higher and higher throughout the morning session, pretty much into the open and then some. So yesterday in the afternoon meeting, we were saying how it was mostly a VIX themed market for the day, for the past 2 days. Friday, the VIX was up in a pretty impressive way. Yesterday, the VIX cooled off in a pretty big way as well. Both days, TLT had really big gaps. Friday to the upside, yesterday, Monday to the downside. And they didn't really do anything intraday, to the point where, again, they were like kind of the tightest daily intraday candles we've seen in TLT in quite a while. And we were saying that although the VIX is the focus and will remain a key focus because it obviously drives the market in a big way, if this TLT keeps sinking lower throughout this week, the market is definitely going to be taking notice of that. It's at this point not too far away from new lows, and a lot of interest rates are making new highs as well, depending on the duration of the rate you're looking at. So big TLT gap down, big gap, kind of a big gap down in general for this market, which again started as not too big of a gap down, and then by the actual open with the NVIDIA news and the retail sales, we were gapping below. We were actually set to gap below yesterday's low in SPY. Qs were also set to gap below yesterday's low. And the only one that wasn't was the IWM, which had the strength off the open. Just taking a look at these daily charts here as well. And these Qs still really don't look too bad at all. Those Qs still don't look too bad. IWM, which had a solid candle today, was showing the relative strength pre-market. Banks were helping that a little. Oil was helping that a little as well. Energy in general. But that relative strength definitely came to fruition off the open, and that traded up well today. And then there was a kind of just a crazy session. So we're coming into like an ugly open where after the close yesterday, the market is looking pretty good. We're getting ready to possibly break higher on the daily for a SPY 440 plus test. That's technically what we should be setting up for. Then by this open, we're set to gap below yesterday's low. So anyone that bought, even if you bought perfectly yesterday and you held at the close thinking that, you don't want to miss a gap, like we're about to break up and you don't want to miss a gap up or anything, so you hold some stock. And then by the open this morning, you're giving that all back and then some. That's usually not the best setup and can sometimes set up for breakdowns when you get those kind of gaps in the other direction like that. So 433 and 437 were our two SPY levels that we were looking at. Get this 5-minute chart up here. So we traded up okay for the first 10 minutes or so. It was a really big gap down. And some of these names, again, like this NVIDIA, had a really big gap down, so that was pretty notable, yet that still sold off really heavily. And that was some true panic selling that I feel like we don't see that as much anymore, really. We were talking about NVIDIA 425-ish area. I was actually looking for a bigger flush of 425 there, but that was huge extension down there, and it ended up bouncing really, really well. So this market looked like it was getting ready to break down here. The Qs actually did kind of have that breakdown. SPY, we were talking about 433, Qs 365 this morning, and SPY tried to hold 433, lost it, recouped it. It was helped out by the IWM off, which, two super powerful candles right away. Red to green move pretty much instantly. While the Qs 365, they actually did break down that 365 level and traded down to mid 363s. So, not a huge breakdown, but if you were looking at that level, you definitely could have gotten paid from it a little bit. And that was just from support from these past 2 days or so, which again, Qs had an inside day yesterday, but they closed well. And then today we were set to gap below that open. We did gap below that open. by the time things were said and done. And then it was just a, kind of a buyer-seller battle from there. Just taking a look at the VIX off the open too, which this helped the rally in general as well. Kind of similar to SPY here, sold a little bit of a pop and then just big sell bar right here that totally negated that strength. And again, IWM just pushed higher and higher. Qs were able to find a bit of bottom and bounce. That happened pretty much at the same time as NVIDIA, and the NVIDIA bounce was very strong, 425 back to 445. I mean, this thing is swinging 20 points in an hour. It's kind of wild. And IWM kept pushing up higher for pretty much the whole morning until finally topped out. So we had a little mini Q breakdown, an IWM complete and utter relative strength reversal, and a SPY that tried to break down but couldn't. So arguably a little bit of a false breakdown there for the SPY. That leads to a powerful pop, squeezes. If you're selling, I mean, it's just like a emotional battle really going on throughout the day today, where like if you're long from yesterday and then you're gapping below yesterday's low, you might be selling out for a loss. And then if you're seeing this rally, you got to buy back higher, and you're kind of maybe angrily buying back higher. At the same time, if you're a smart short and you're waiting for the proper breakdown and you're finally getting it today, and for the same reasons you're saying, oh, we're gapping below all of yesterday's action, there's reasons for us to break down, and you're trying to short this, you're getting squeezed up here. Pretty much a false breakdown all the way up to SPY 437, which I think around here we were kind of just consolidating and saying, we wouldn't be too surprised if we kind of just got stuck like yesterday. It'd be pretty impressive for us to be where we are at this open, where things were set up to be, and then end up actually having the breakout today, even though yesterday we closed well. And, we're not saying at the close yesterday, let's lose yesterday's low first and then break out. That's usually not what you want to see. Ended up breaking that 437, pushed a little bit, but ended up failing that as well. It just seemed more or less just mechanical. The VIX did end up finding a bottom, and it bounced, and that bounce just kind of kept pushing a little bit, and that accelerated higher into some intraday trends break, intraday stops get hit, stuff like that. So we fizzled out, and we once again did not break out. So we did not break down, little false breakdown, almost broke out, but failed to break out. Little false breakout as well. And where does that leave us? Pretty much in the exact same spot we were in yesterday at the afternoon meeting at the close, with a whole lot of action in between. But I mean, the exact level we closed yesterday for SPY for, was that like 436? Is that right? Yeah, 436 closed yesterday. Today we closed for pretty much exactly the same. Yeah, pretty much exactly the same. I guess we're kind of down after hours, but more or less unchanged. So, yeah, really, really wild day today with no progress at all made on our SPY daily charts. Where do we go from here? Take a look at the VIX and VVIX daily charts real quick. Oops, what did I just do? So the VVIX broke Friday's low, but snapped back above. Looking at this now that it's finally closed, I would say that this is a better sign for bulls than bears here. If this VVIX had a better looking bullish candle, that would be making the bears more excited that today's rally was more short squeeze than like a real buyers coming back in type of rally. But yeah, this broke Friday's low, did tail back up. It did close it okay. Again, after Friday traded as high as it did back in March. But yeah, that's not the best close for the VVIX, which is better for the bulls. If you're not looking at that and you only look at the VIX, you're probably more excited as a bear looking at the VIX and seeing that we didn't break Friday's low today. We're still holding that. Big day on Friday, cool off day yesterday. Green day today, closing higher than the open. So if you're a bear and you're only looking at the VIX, you're probably a little excited, but that's why we don't only look at the VIX, we also look at the VVIX. And if you're looking at the VVIX, you're probably feeling a little bit safer as a bull seeing that. It's still obviously mixed in general though. TLT, a gap down today. As we said, don't want to see that lower than the week or the market's going to take notice. But this gap down and traded, had some actual intraday movement today. Not a huge move higher, but this did trade up, closed higher than it did at the open. And it kind of flushed out a little bit at the open as well. Looking at this 5-minute chart here. You can see a little shaky at the open, but kind of flushed out there, but extended, more or less V-bottomed that. Decent rollover this afternoon, but this did end up closing okay today. So we'll see where that gaps tomorrow. This has been having big gaps every day. Big gap up on Friday, gap down Monday, gap down today. We'll see what that does overnight. The fact that it closed okay, I'd like to think that it could be trying to stabilize here. And if it is trying to stabilize, that is more supportive for the market, which is another sign for the bulls to, hopefully have some hope here. And it's probably better to, even though we didn't make much progress today, to see that kind of false breakdown take place, or not really false breakdown, but just failed breakdown, if you will, with the Qs also ending up closing well. It's probably a better setup for the bulls in general, even though it was a little bit scary in the morning. I think we're looking a little bit better than we were yesterday, now that we it was like a shakeout, if you will, shakeout type action anyway. So I think we're set up a little bit better after this. But we're subject to overnight gaps. We're subject to overnight news. Hopefully things are going in the better direction overseas. And these interest rates, again, moving kind of crazy overnight. So we'll see what TLT does tomorrow morning. And yeah, I think that's all I got. Nothing too special from trades. We're looking at banks this morning. Bank of America, some of us traded that, and that ended up being decent. Goldman traded down today, failed that 316 breakout, broke that 312 level. Morgan Stanley is the last kind of big bank to report tomorrow. This traded decently into that report, so we'll see with Morgan Stanley tomorrow morning. And then Netflix and Tesla really kicking things off tomorrow afternoon. Netflix has been relatively weak in just about every single way. Finally caught a little bit of a bounce on that the past 2 days, but right back down today. I'm looking forward to this Netflix report just because it's trading so bad. So it's either going to have a decent report and, stop trading this bad, probably. At least it should. Or this report's going to be ugly and this thing's going back down to 300. So that'll be good. And then obviously Tesla is going to be interesting too, obviously. And this thing has some nice consolidation going on with it. Big tightening wedge pattern triangle type thing there. So yeah, Tesla, Netflix tomorrow, as well as a bunch of other names as well. Earnings season is really starting to kick off in a pretty big way. So we'll see with that. And yeah, I think that's all I have to talk about. So how to take a look at anything you guys are chatting about. Pull up YouTube real quick. And, just make sure I didn't miss anything elsewhere real quick. Figure out 1080p for Rich. NVIDIA chip news, thank you. Hey, Pat, can you look at a trade for me? For sure. At Roblox at 949. You bought shares at 30.39, stop loss 30.22, 10.05. You were stopped out. Tried again. Only went a few pennies below my first stop. again. You're shaken out. The stock's really frustrating you. Yep. So for this one, I would say so I'm guessing that you're using 22 as your stop based on the second bar of the day. You can confirm that for me if you want. What are you guys congratsing everyone on? Oh, Eddie. Nice job. So because I was looking for the 22 low, I was guessing it was a bar low. It's right here. So right away, I'll first of all just say that I don't like that out. It's just not really an out. To say it plainly, it's not a daily whole number level. It's not the low of the day. It's not the low of an ignition bar. It's not really the opening of anything important. I mean, I get it, but this is, something I used to do all the time too. And this happens often, and this is why we try to, go over these types of things. But yeah, I don't like the out. It just doesn't. That just doesn't really matter. If I just talking through the action here, Roblox opens, it holds 30 spot 00 as a low, which that can be notable in itself. Even if that just kind of poked 30 though and then came back up, I would say, well, 30 is your obvious level there. So Roblox opens, it's gapping down, it trades up into equilibrium. Equilibrium's coming down, it's a gap down. This Roblox technically should have a pause here, whether that pause is a time correction sideways or it just fails the bounce and comes back down. That's probably what should happen. So one, you got your daily level here, but this Roblox could come back down in a pretty big way off that equilibrium. But it has two bars up, hits equilibrium, sells back down, and this is where you're looking for a higher low to come in to eventually trade back up through the day high, and that's when you can move your stop from the day low to that higher low, and then eventually you can start to trail a bit tighter for money management and stuff like that. Trying to think of something a little bit better to say, but I just don't like the out. It's not a good out. It's not a real out. Your out should be based on something more legit than just kind of the second bar of the day. It just doesn't really matter. Even when I take tight stops all the time. Obviously not on everything, but I like to do that when I'm looking for momentum to come in and I want to buy some real size, and I don't want to give that real size real room because I don't want to lose a bunch of money if it doesn't work, and I'd like to be able to try it a couple times just in case. But when I'm doing that, I'm still doing that at real levels and real areas. At least that's what I'm trying to do. That's the point. I'm buying through a big whole daily level, and I'm giving it a little bit of space below, and I'm basically looking for momentum to come in right there and then. Or maybe it's some pivot where I'm buying somewhere, I don't know, in here, and the low of the day is a little bit, say the low of the day is 29.50 and it had a really big flush, and I'm looking for a higher low to come in off 30, so I'm buying off 30. I'm not giving it to the low of the day. I'm kind of half maybe making an out where, I don't want to give it all the way to the low of the day, but if it's trading back below this kind of real daily level in the first place. It shouldn't be, and therefore probably will go to the low. You gotta kind of make it make sense like that, if that makes sense. It's got to be it's usually got to be based on something a little bit more legit. That's my long answer of just saying that. I just don't like the out. Let me just, yeah, I think that's it really. Just if you, I mean, hindsight's 2020. I'm not going to say if you use the day low as your out, you would have, been okay, but that is true. That's kind of your lesson there. And that's not saying that the day low is the out to use every time on the trade. I'm definitely not saying that. But the day low on this happens to be 30, which definitely is a level for Roblox. Looking at this daily, and yesterday I held 32. I mean, it poked 30, but that's it. Maybe you could have used yesterday's low as a little bit room just in case it flushed 30. But yeah, that's my answer for you. It wasn't the right out. It was a good idea, good trade per se, right idea and everything. Just it wasn't the right out, and that's what happens. But that's a good thing. That's what I was saying. I think yesterday or someday, maybe last week, when you guys were asking about like extension trades, and it's I would always, as a newer trader, find myself losing money on trades and ideas that would end up working, and that's better. That means you're getting closer. It's one thing if your ideas are just totally wrong, but if your ideas, even if you're not trading them perfectly, are working, you're in the right direction. So you gotta figure out the balance of how to not take too much risk, but also, be in your ideas that work, because otherwise, what's the point of staring at this computer screen all day and not going to play golf like Josh, right? So yeah, I hope that explanation helps. But that's the main point, I would say. It's not the right out. That the low, that second bar of the day isn't really that meaningful. That's the type of stuff that algos intraday look to shake at. When we talk about like the algos shaking us out, like that's kind of the stuff that they look to do. They look to poke those kind of random 5-minute spots. But when it's a daily level, they're usually not, they're not just poking those daily levels and stuff. From Rex. Some questions regarding to execution when the market trend down, especially the Qs 940, 950. Realized that was the only one. I do remember, I think that was you. You were definitely one of them calling out that relative strength. Yep. Holding during that move, but I'm not sure where would be the correct in, the correct out. Turns out I missed the opportunity. I could only catch, yeah, I feel that. And this is probably going to be an example of if I were doing this, I probably would have had to use a tighter stop and look for momentum and be willing to try it a couple times, because it's probably going to be too much room. You said you saw it at 940 to 950 throughout here, possibly. I remember even we were looking at it like up here too. So you're just looking for like some execution. So I mean, if you saw it from 940 to 950 and you saw all these tails coming in, ideally you could maybe buy it back through 318 versus the low, and technically the low came in at 935 and that wouldn't have stopped you out. It would have gotten really close though. This is obviously hindsight trading. Say you miss that and then you get this bar into equilibrium. You definitely don't want to panic buy into 5-minute equilibrium, so let it chop a little bit. 5-minute equilibrium hits, it chops a bit. This bar is 10 o'clock. At 10 o'clock, by that point, the market did not have its power bar up yet. So by 10 o'clock, Meta is bouncing, you know, Meta's bouncing to its 5 minute equilibrium at that point, and the market, or it already has, it did it at the 955 bar actually, and the market is not yet. SPY is not. Qs are extended to the downside at that point, and Meta is bouncing to its 5 minute equilibrium. So that's solid relative strength. That's a great eye seeing that. That's exactly the type of stuff we try to focus on and should be focusing on more, and I'm trying to do better at being involved in that type of stuff. So 10 o'clock bar, right? 9:55, 10 o'clock. Meta, yeah, right here, 9:55. Meta's bouncing to its equilibrium. The Qs are pretty downside extended from it still. SPY is also downside extended from it. And they haven't bounced at all. So you identify the relative strength. Your day high in Meta is 321, I remember, I think. 320.50 was your high. Yeah, I mean, so personally, the way I would do this, and that is hard because I am probably not buying Meta in the mid 319s or even Meta 320 and giving that 320 down to 317 and then, needing 3 points on that. The way I would probably look at that is, one, definitely look at the daily chart first. Your daily chart looks pretty good in Meta. I mean, I do remember talking about buying it through 320, which this would have paid okay, but say this chopped around a bit. I think you got to try to buy it somewhere in here. I can't give you a perfect execution. Maybe through 320. I try to cheat though usually when I'm doing my buys. But I think if you're only looking at this chart, it's a little hard. But if you're in your brain going through what I was just kind of talking about, where you're seeing the relatives, and this is late too. I mean, you're saying 940 to 950, but I'm saying if you need to get like really bad execution, but you still want to be in something too. I mean, it's bad execution per se on a 5 minute chart, but there's other factors going on that are bigger than just this 5 minute chart. And again, if you're going through your head while this is going on, and you're saying the Qs haven't bounced and they're downside extended, this is bouncing already, therefore, like, you get to these spots of kind of, I guess divergence is the word I use a lot, but it's kind of where like one thing needs to happen over the other. Like both of these can't keep happening. So Meta could bounce back to equilibrium and fail and come back down. But if that happens after showing that relative strength, I mean, what are Qs going to do? Just go straight down even more? And by that point, they're going to be so extremely extended that we'd probably be buying them anyway. So when you think about it like that, it should make you less scared to think that Meta is just totally going to fail this move. So therefore, when you're thinking, well, Meta probably shouldn't fail this move because, again, it's showing the relative strength. The Qs are downside extended already in a spot where you could be looking to buy in the first place. So that kind of gives you like a little safety blanket in your head, if you will. That's kind of how I think about it, where, okay, there's kind of a lot of space here, but it's really, like, the probabilities are against this failing. So therefore, you can kind of try to look for a pivot. That's the best way I can really say it. Try to look for a pivot where maybe it's, through this. Maybe it's not through 320, it's through this high here where it comes up to equilibrium, it makes a little shooting star, and then it negates that shooting star. It's already showing the relative strength, so you should be kind of thinking if there's a name that's going to really go red to green, this Meta is probably going to be one of them to really try that because of this relative strength. So you kind of got to look, really just look for a pivot. Again, it can be through 320, it can be the negation of this candle. It can just be off this 319 level, 318 level area. It did lose 318, come up to 318, couldn't get through 318, but then did get through 318. And sometimes, when you're doing that, you kind of got to build in a little bit. And then sometimes you just get a solid candle like this. And then at this point, when it's through 320 on this candle, that's your obvious out. And hopefully as well, when you're doing that, you're giving yourself some upside room as well, because if it's showing, it's showing relative strength in a bad market. So what happens when the market turns good? It should be showing super relative strength. So yeah, I hope that makes sense and kind of helps Rex. There's no black and white way to say perfectly how to do that. If there was, then I'd be rich and not here. So yeah, that's kind of the way that I would look at it and do it, and kind of think about it as it's going on. Yeah, let me know if you have any follow-up questions on that. Josh sharing some Microsoft news. Talk may bring on Amazon as a 365 customer. Did Microsoft trade up on that? Yes, it did. Yes, it did. Trade up a decent move after hours, actually, on that. Up like 4 or 5 points. Eddie Vick asking, do you think we would push over 4,400 by the end of the week? The end of the week is so far out, Eddie. By the end of the week, we could push over 4,400, fail that, go to 4,350, look like we're going to break down 4,350, fail that after going to 4,325, and then go back up to 4,400 and be at 4,420 by the end of the week. Your guess is as good as mine. This market changes hour by hour, day by day, night by night. Wish I had a better answer for you, but I don't know how this TLT is going to be gapping overnight every day this week, and it's definitely going to matter if we get some more gap downs in that. And yeah, Tesla and Netflix as well. See Eddie talking about his trades, Eddie Min chatting it up. Check YouTube. Don't see anything on the YouTube. All right, almost 5 o'clock here, so I guess I'll wrap it up unless anyone has anything left. Gone once, gone twice. Sold. Alrighty, so tomorrow is Wednesday. I don't know, Eddie. I think that was a little too late. Just kidding. UAL is a disaster. These airlines are a disaster. What's that airline saying? The fastest way to be a millionaire is to be a billionaire and buy an airline? Something like that. Oh my god, this chart is so crazy. I don't know. I mean, 38 is a level. It definitely is. Honestly, Eddie, every dollar down is a level in this. 36 is a level. Looks like 34 is really big support. Do I think it's going to 34? No. If you ask me, do I think it's going to 38 when it was at 48 from 58 right away? I probably would have said maybe, but that'd be pretty ugly. I would say support in UAL is a zone between 37 and like 35. Somewhere in this 37 to 35-ish area, I bet it finds better support. Whether it bounces big from there or just gets stuck sideways, though, is going to be hard to say. The sentiment is pretty poor around these airlines right now, and for good reason. For multiple, I mean, obviously the Middle East stuff, let alone the possible recession that's coming as well, spending slowing down and everything. So 37 to 35 zone, Eddie. 37 to 34 zone, I guess. I would start at 30, so like under 37. Kind of like how the Boeing buyers are under 184, which this Boeing did not close well today, but it did close over that still. You probably start to see some buyers in that under 37, looks like. I would think so. UAL. All right, looks like that's it. So Wednesday, tomorrow, big earnings after the close. A couple data points in the morning, nothing crazy. Building permits, housing starts. Beige book in the afternoon. Beige book didn't really move us last time. We'll see this time. And then big earnings after close. So we will see how TLT gaps tonight and go from there tomorrow. So have a good night, everybody. See you guys tomorrow morning.